Good morning, traders. Today we want to discuss a better way to trade the Fibonacci extension price target levels like a pro. A better way to trade the Fibonacci extensions price target levels like a pro. All right. I'm on the monthly chart of the Canadian dollar, Japanese yen. And we can see that on this chart, we have this red declining channel. All right, pay attention carefully here. I want to use, before we can use Fibonacci extensions, we must use first Fibonacci retracement. So we want to know how far, okay, the retracement went up or went down. Okay, so the price you can see here. Price went down from, pay attention carefully here, price went up, went down, correction, price went down from this point to this point here, all right? Okay, it went down from here to here. Now, using Fibonacci retracement, we can see that the price rally up a bit. Here it is, it rally up a bit. Let's color that into pink so you can see on your chart. Now we will use the Fibonacci retracement to measure how far the price rally up a bit. This is about the retracement. All right. So as I apply Fibonacci retracement to this price action, okay, from this point, okay, down to this level here, we can see that the retracement, the rally up, went up to this level here. Pay attention. It went up to this level, which is 61.8%. Fibonacci retracement, can you see 61.8% below the line that I've drawn? That's 61.8% Fibonacci retracement. So this move down, the profit taking is 61.8% of the move down. So this is 61.8% Fibonacci retracement level. Now, take it from me. The general rule stated that when the price rally, if we have a 61.8% retracement, the profit target for those who are selling right here after this rally, the profit target should be set at a conservative level at 138.2% Fibonacci extension level. So now that we know that the retracement is 61.8%, the target, the profit target, should be 138.2% Fibonacci retracement level. Now, remember that this is not an exact science. The price can continue to go down all the way to 161.8% Fibonacci extension level. Can even go down to 214% Fibonacci extension level. But the general rule is that when we have 61.8% retracement, the first profit target that we must keep our eyes on is 138.2% Fibonacci extension level. So now I'm going to apply, now that I know the retracement, I can now apply Fibonacci extension to this price move from here to here. But when we are drawing a line, we start from the end to the top, okay? Now, where is the 138.2%? You can see it's the dotted line here, okay? I will draw another line because it's quite close to this line here, but I don't want to move that line, so I'll put it there and I'll color it also into pink. So you can see on the chart, that's the horizontal line. So the 138.2% Fibonacci extension price target is the pink line here. Look, so traders that were using the top-down trading method to sell this stock for day trading, for swing trading, for position trading, you can see that as the price going down, look at the tail of this candle here. Q. Can you see the tail of this candle? All right, this candle went down very fast to touch the pink line. It touched it. Q. Boom, and quickly. So, which means traders that were selling here, using Fibonacci extension, we're watching that level, the 138.2% level, because we had 61.8% Fibonacci retracement level. So those traders will place a limit order here to close their trade straight away in that zone, all right, in that zone. Usually they can place it above it, 10 pips, 20 pips, depending on their risk tolerance. So as the price was going down and was reaching this zone, those limit orders were triggered, and some of the bearish trade were closed. Therefore, we have the tail of, we see the tail of this candle. So orders to buy were placed here to close the bearish trade at the first target level, 138.2% Fibonacci extension level. Now, talking about a better way to trade Fibonacci extension price target level like a pro, what I want you to do from today, or what I want you to remember, is two things. The first thing that we are paying attention to when we are using Fibonacci extension or Fibonacci retracement is what? The market pattern. So we have a declining channel. All right. So what the declining channel is telling us is that the price is going down. All right. If we had a rising channel, it's telling us that the price is going up. So we don't want to stand on the way of the price doing something else. So how do we sell? All right. In a declining channel, we usually wait for a rally. So after it touches this, people will take profit. And suppose you did not sell here, you want to sell, you want the price to rally up to the edge of the channel. But what usually takes place, this is why I'm saying to you, a better way to trade Fibonacci price target level like a pro, is that Fibonacci traders are very aggressive traders. And also there are many computerized trading methods out there that are using Fibonacci extensions and Fibonacci retracement. And those are crazy algorithms out there that are trading like a mad individuals. Okay, there's nothing wrong with that, but I need to mention it, okay? So what usually takes place, pay attention, a better way to trade Fibonacci extension price target level, this is it. What I want you to do is that the price very often, because you can see that this currency pair has been controlled by the Fibonacci traders. They sold it here. As the price reaches their ultimate target, they took profit. So they are the dominant force. They are controlling the price move. But what they usually do is this, my friend. So I want you to understand this. So we have, okay, the 100% level. So this is the 100% level, okay? So this is 0%. So where the price starts moving down, it's a 0%. And then we go down to where the price has ended before changing direction. That's the 100% level. And below that, we have the 138.2% Fibonacci extension level. And then below that, we have 161.8% Fibonacci retracement level. And then below that, we have 200% Fibonacci extension level. And then below that, we have 214% Fibonacci extension level, and so on and so on. There are various Fibonacci extension level. So what usually takes place, my friend, this is what I want you to remember once and for all. If you see that the Fibonacci traders are controlling the price, they sold it at 138.2%, or they sold it at 61.8% Fibonacci retracement level. Okay, they sold it here. Their first target is 138.2%. If you see this, that they took profit here, and the price is rallying up, remember that sometime, or even very often, the price may not touch the top of the rising channel. It's not always the case. Remember, it's not always the case. It's not 1 + 1 = 2, and it's always like this. There's nothing like that in this financial market. So very often is this. As those Fibonacci traders are controlling the market, the price will find it difficult to touch the top of the declining channel. But instead, we rally up to retest the next Fibonacci key level, which is what? The 100% level. Are you following me? So it touches the 138.2% level. Instead of rallying up all the way to the edge of the declining channel, sometimes the price will rally up. You see here, it breaks below the 100% level, okay, and went down to the 138.2% level. As the price is trying to go up to retest the edge of the declining channel, usually you will find a resistance at the 100% Fibonacci level. Here it is. You see here, rally up the 100%. Can you see 100%? 100% Fibonacci extension level. So what the price, you will see if the Fibonacci traders are controlling the price, they will not prefer the edge of the channel. They will be preferring break below, retest. All right? Because we are in a declining channel, we will prefer break below, retest. But it will be retested around the key Fibonacci extension levels. So because it went down to the first target, 138.2% level, it was trying to retest the edge for the declining channel. Fibonacci traders are aggressive traders. They wanted to retest the 100% level. And here it is. And then they will sell again on the edge of the 100% level. But it makes it a bit tricky for ordinary technical traders, because the best place we will prefer to sell at a low risk entry point is on the edge of the declining channel. So it makes it very tricky, all right, because the risk is lower on the edge of the declining channel. But Fibonacci trader, as it break below to retain the 138.2% level, watch out that there is a high chance that it will stop to retest the 100% level. Then here, if you see here, it rally up to retest the 100% level. It doesn't mean sell straight away. It means use a top-down trading method. And if the signal is fires, use another time frame to enter the trade. Do not ignore the market environment and do not violate the trading triangle. All right. Okay, so here it is. So now it rally up to retest the 100% level, final resistance. If it start going down, what is the next target level? The 161.8% Fibonacci extension level. Can you see? 161.8, follow my cursor, 161.8% Fibonacci extension level. So that's the next Fibonacci extension level. All right. So I will color that also into pink so you can see on your chart. That's the second pink line. So I will change the color of the first one. Or in fact, I will remove that pink line. So we see only one pink line here. This is it. You see here? So as they sold it on the edge of the 100% level, break below, retest, use the top-down trading method, signal is fire, okay, enter the trade on another time frame, it's going down. It will continue to go down most of the time and reach the next Fibonacci key level, which is the 161.8% Fibonacci extension level. So they sold it here. See, it came here, but it went beyond it. But I have a reason why I want you to watch that. Okay, so that's why I put it there. But as the price reaches the next target level, which is 161.8% level, or even went beyond it as it did here, if you want to sell again, where do you need to look? Normally, we will prefer a rally, a northerly rally, up to the edge of the declining channel. But most of the time, you will see that the price will rally. So first time, remember what he did? He rallied up to the 100% level, and then he break down, okay, and now he went to the 161.8% level. As he goes beyond, if he start rallying up, you prefer the edge of the declining channel, but you will see that the price will go again to the rally up to the next, Fibonacci extension level up, which means from the 161.8% level or even below, as it's going up, the level that we must watch is the 138.2% Fibonacci extension level, the one above. You remember the first pink line? This is how those Fibonacci traders and Fibonacci software are operating in the market. So as he went beyond, he rallied up. We will prefer the edge of the declining channel, but he did not. But you see here, he rallied up to the 138.2% level. So all I want you to do is to put all the Fibonacci extension level on your chart: 100%, 138.2%, 161.8%, all right, 200%, 214%, and so on, 300%, 314%, 361.8% Fibonacci extension level on your chart. Draw those lines. And if you want to sell in a declining channel, watch out for a break below, retest. So if you break below, the 138.2% level, what is the target? 161.8% or beyond. If it's rallying up, we want it to come back to the 161.1. We want it to come back. So if it break below a key Fibonacci extension level, we want it to rally up to that Fibonacci extension level. If it break below the next Fibonacci extension level and it's going up, we want it to come back to the one it breaks below. So break below a Fibonacci extension level, return back to the Fibonacci extension level, and so on, and so on, and so on. So break below 138.2% level, rally up to 138.2% level, break below the 161.8% level, rally up to 161.8% level, and so on, and so on, and so on. And the price will find it sometimes very difficult to retest the edge of the declining channel. This is a better way to trade Fibonacci extension when the Fibonacci traders are controlling the price, but the risk is lower on the edge of the channel, all right? But this is what we usually notice because of, the trading software out there. So you may be saying, George, look carefully, my friend. What are you talking about? Okay, here it is, my friend. Can you see here? So as he breaks now you see break below. This is the second line. Let's remove the first one, okay? Okay, so now he breaks below, okay, the 161.8% level. Can you see 161.8% level? Break below 161.8% level. Where do you need to sell? You want it to rally up to 161.8% level. You see the shadow on top. Okay, let's go to, I'm on the monthly chart. Let's go to the weekly chart so you can see everything clearly. Maybe it doesn't make sense to you. Here it is, my friend. Here it is, my friend. So can you see here? So he breaks below the 161.8%, the pink line. Look what he was doing. He was trying to retest it, okay? That's what we are talking about. Rally to retest it, okay? All right? Now, first time he breaks below the 138.2% level, this 138.2% level. So he breaks below 138.2% level, rally up to retest it, come back down a bit, but rally up again to retest the 138.2% level, coming down below the 161.8% level, trying to retest the 161.8% level, and so on and so on. All right, this is what's going on all the time. All right, so this is a better way, okay, to trade Fibonacci extension price target level like a pro. All right, if you have any question, all right, or suggestion, all right, put in the comment section, and in due course I will be recording another video to answer your specific question. Very important point before we close. As always, you learn something new on YouTube, all right? Don't rush straight away to use real money. Okay, best approach, use demo account, test it, or try to master it, all right? Because if you don't master it, it's not going to make sense for you. You may say this is a useless trading setup, it doesn't make any sense, but try to be a little bit calm, all right, and then work on it, okay? And if you master it, it becomes yours. That's what we meant by to own the system, to own the method. So it becomes yours, and you can trade it like a pro, all right? And you will see that it's happening all the time. So here it is, break below, okay, retest, okay, break below, retest the Fibonacci extension level. Price is not going near the upper side of the declining channel. The opposite is also true in an uptrend. In an uptrend, we'll be talking about break above, retest, break above, retest. So you so if the price, okay, so if we are in uptrend, the price rally up, going up, okay, and then pull back, okay. Now we want to know how much retracement we got, and then we set Fibonacci extension up. We have all those levels up. So if you want to buy in a rising channel, the price may find it difficult to retest the lower part of the channel if the Fibonacci traders are aggressive and are controlling the price. You will see that very often on the higher time frame, daily chart, weekly chart. You will see that. All right, maybe not on the lower time frame, but you will see that very often. So what we will be looking for is break above a Fibonacci extension level and pulling back to retest that Fibonacci extension level. Then we implement a top-down trading method to trade it, okay? We are the TSTW24 traders talking about better way to trade Fibonacci extension price target levels like a pro. Happy trading to you all, and speak to you soon.